Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. So in this particular video, we are going to be diving into something really exciting and essential for anyone who is serious about Forex trading, okay? Now it's one of the patterns that occurs in technical analysis, one of the patterns that occurs on the charts, and that is what we call diverging trend lines, okay? So it's a pattern which we use trend lines to identify. Okay, so these are one of those hidden gems in technical analysis that can give you insight into potential trend reversals in the market. Okay, now if you've ever looked at your charts and noticed that the highs and lows seem to be moving away from each other, that's exactly what we're talking about. Okay, now divergent trend lines are formed when price action starts pulling apart. Okay, creating an interesting pattern that often signals that something big might be about to happen. All right, whether you are trading forex or stocks or crypto, learning how to spot and understand these diverging lines can make a real difference in how you analyze trends and manage trades. Okay, so let us start with the basics. Okay, divergent trend lines are drawn when the peaks and valleys of a price chart don't move parallel. Okay, all right. So let us look for any example we can find. Okay. So when you have the peaks and valleys moving on parallel to each other, they begin to angle away from each other. That's why we call it divergent. So that's what we are looking for right now. Okay, when you have higher highs forming and lower lows forming at the same time. Okay, that's when we have a divergent triangle, or we call it a divergent trend lines, pattern. Okay, when you have higher highs forming and lower lows forming, you find that the price action is moving away from each other. You have the price, the trend lines actually moving away from each other. Okay, so for example, okay, because in order not to waste so much time, in order not to take so much time, I'm just going to use this as an example, although this is not like a perfect scenario, but we can see that we are having higher highs here, right? And then at the same time, we had lower low here, right? So had it been this pattern continued, had it been it continued, because it didn't continue, it's just stopped somewhere here, right? So had it been it continued, you would have seen price coming back down, to touch somewhere to touch this trend line, and then going back up, and then coming back down again, and then going back up, and then you would see that the pattern will be forming a sort of, you'll find out that it's as if the two trend lines are coming from a point and then widening apart. Then at some point, a breakout is going to occur, right? At some point. But sometimes you might find this divergent pattern going on for I don't know, a lengthy period of time. Sometimes it might take, depending on the time frame though, it might take a couple of days, sometimes it might take weeks, yeah, depending on the time frame. All right, it might take months. Okay, so you can see that this is currently the weekly time frame. So had it been this pattern had continued, you might even find out that it can even take a few years, right? So yeah, it depends on the time frame. Okay, but basically the pattern forms when you have higher highs and lower lows. All right, okay, it's very important to understand this pattern. Okay, so divergence occurs when the price of a currency pair moves in a different direction than a technical indicator. Okay, that is for divergence. All right, if you want to use divergence to trade, maybe using the MACD or using the relative strength index, or any other indicator of your choice. Okay, specifically momentum oscillator. It could be the RSI, it could be stochastic oscillator, it could be the MACD. All right, that's when we talk about divergence trading. Okay, but in this situation, we're talking about divergence trend lines. This is majorly on the chart. This does not necessarily involve any of those momentum oscillators. All right, it does not necessarily involve them. Okay, but if you want to use those indicators just for extra confirmation, that you are free to do that. Actually, you can use those indicators to confirm the price reversals, because you might have a divergence forming. Perhaps you might have the price making higher highs, and you might have your momentum oscillator making lower highs, which is going to be showing you a bearish divergence. So you can actually use those indicators as additional confirmation. Okay, but basically you can trade the divergence trend line pattern even without using any of those momentum oscillator. Okay, but it's important to get additional confirmation. All right, now how do you trade this pattern? Basically, once you have had the first two highs and the first two lows, what you have to be looking out for is because when you have the first two highs, it means a dynamic resistance has been formed already. When you have the first two lows, it means a dynamic support has been formed already. So you have to be watching out for price coming down from the resistance to the support and climbing up from the support to the resistance. So you might just want to be trading within that channel. Okay, so if you enter a sell around the resistance, you can set your stop loss some pips above the resistance, depending on how tight you want your stop loss to be. Okay, but at least there should be some gap for some false breakout. In case of if there's going to be a false breakout, you can give a significant distance, right? But make sure you observe good risk to reward ratio. All right, and then when the price comes down, if in a situation whereby the pattern actually holds and you find price ranging between the lines, okay, then you look for buy entry toward the support, and then your stop loss can be some pips below the support, and then your take profit obviously will now be at the nearest resistance, or rather at the trend line resistance. Okay, so basically that is how to use the pattern. Now, why diverging trend lines matter? You might be asking, why does it matter? Why do we need to care about diverging trend lines? The main reason is that it gives us insight into market momentum. All right, so these lines, they give us a little bit of an insight into the momentum of the market. All right, and then it can also help you to observe reversal points. Okay, those trend lines are dynamic support and resistance levels, so it helps you to observe reversal points. Okay, it's important. So this strategy is quite a straightforward strategy. It's quite an easy strategy. It's a pattern that can easily be spotted on the chart. Remember, all you just have to look out for is higher highs and lower lows. All right, the highs must be making new highs which are higher than the previous highs, and the lows must be making new lows which are lower than the previous lows. So it's neither a bullish structure nor a bearish structure, because bullish structure occurs when you have higher highs and higher lows. Bearish structure occurs when you have lower highs and lower lows, right? But in this case, it is not a bullish structure, it is not a bearish structure. Okay, and there you have it. Diverging trend lines are such an underrated but nice pattern for traders, right? But by understanding how to spot and use this chart pattern, you'll have a way to interpret market movements, especially in identifying when trends may be losing steam, okay, or losing strength. Remember though, this isn't a standalone strategy. It's one part of a bigger picture in technical analysis. So what do you think? Are you ready to start identifying divergent trend lines on your own charts? You can decide to give it a try and let me know in the comments if you found any interesting patterns. All right, if this video helped you better understand how to use divergent trend lines, make sure to hit that like button and subscribe to the channel for more in-depth Forex trading tutorials. And don't forget to click the bell icon so you are notified every time we upload a new video. Thanks for watching, and I will see you in the next video. Until then, make sure you trade smart, make sure you observe good risk management, and make sure you stay profitable. Cheers and happy trading.